If you're in Australia, you must have heard that Payday Super is coming into effect from 1st of July 2026. It sounds like a significant change, and in some ways it is. But once you understand what it actually means and what to do in Xero, it becomes a very manageable extra step on Payday. In this video, I'm going to walk you through what Payday Super actually means in practice, the settings you need to review in your Xero file before your next pay run, and the updated super payment process, including the brand new superannuation screens in Xero. Let's get into it. What does Payday Super actually mean? From 1st of July 2026, paying wages will also mean dealing with superannuation at the same time, not quarterly as before, but when the wage is actually paid. Under Payday Super, your employees' super contributions need to reach their super funds within 7 business days after payday. And this wording is very important. It is not enough to start the payment within 7 business days in Xero. The money needs to actually land the employee's super fund within 7 business days from the salary payday. Because the super clearinghouse still needs time to process and distribute the funds after you approve the payment, in practice, you should process your super payment on the payday or as close to it as possible. If you miss that window, the ATO can issue penalties. And let me tell you, those penalties are not small at all. The good news is though, once your Xero file is set up correctly and you know the process, it is just a couple of extra clicks on payday. And that's what I'm going to show you today. Before you process super under the new rules, there is one thing you need to do in Xero first. You need to review your existing pay items. Under the old superannuation rules, super was calculated based on the ordinary time earnings. Under Payday Super, the calculation uses the term qualifying earnings instead. For most standard pay items, the treatment will remain similar. The difference matters most when you have a more complex payroll, and especially when you pay commissions. So you should not simply assume that every existing setting is correct. It's better to review all pay items and change the settings as required. You can do this 2 ways. Let's go to Payroll Settings, then select Pay Items tab. For each pay item, there are checkboxes at the bottom, report as qualifying earnings, and including superannuation calculation. You can update the settings directly editing the pay items by ticking or unticking these and save the changes. But you can also use the bulk review option that is available as prompted notification on this screen as well as on the Pay Employees screen. Both take you to the same place, the review tool. Here you can find all your active pay items in one place, so you can tick and untick across the whole lot. If you have more than a handful of pay items, this is the faster approach. Now the practical question, which pay items should be qualifying earnings? The ATO has published a detailed guide that shows the treatment of different payment types in the old and in the new system. This can be opened from this link here. This is super handy, so please use it. One area that deserves attention is commissions and bonuses. Under Payday Super, all commissions are included in qualifying earnings, so super is payable on them. This includes commissions entirely relating to work performed outside ordinary hours that was excluded from ordinary time earnings before. However, on the other hand, bonuses for overtime work still not qualifying earnings. No change was made there. So if you have commissions in your payroll, you need to check these carefully. One important rule is that an item cannot be reported as qualifying earnings without also being included in the superannuation calculation. If you try to select only the qualifying earnings option, Xero will display an error message. That makes sense because qualifying earnings is the basis on which the minimum superannuation obligation is calculated. Once you've reviewed and saved your pay items, your one-off task is done. Moving forward, when you create a new pay item, you will still need to check that its superannuation and qualifying earnings settings are appropriate, but you do that while creating the pay item. Now let's look at the actual Payday Super process. If you have already watched my Paying Super in Xero video, you already know the process. Since then, the screens in Xero have been somewhat updated. They are a bit cleaner, more user-friendly, but the underlying workflow is practically the same. The difference is where you initiate the super payment from, and there is one new step at the end to ensure compliance. So, You create and post the pay run and pay the employee's net wages as normal. Once the wages have been paid, from the actual pay run, click Make Payment at the bottom and then select Pay Superannuation. You will land on the new Superannuation screen where Xero lists the outstanding superannuation obligations available for payment. You have the filter buttons up here and the submission panel on the right. If you have been processing Super every payday, this screen normally contains the contributions from the current pay run only. In the transition period, though, you may have other unpaid obligations from earlier pay runs here. So don't just blindly select everything without reviewing the dates and the pay periods. Select carefully the Super lines that you want to include in this current Super payment. Before you submit the batch, run your usual checks to confirm that the amount is correct. Cross-check it against your Super accruals report and payroll employee summary report. I showed my full checking process in the Paying Super in Xero video that I link here if you need it. Also, Xero may identify some issues with the records like missing or invalid employee Super details. These will be visible on the top of the screen in a red-lined warning box. Correct them before submitting the batch. Then quickly check the information in the submission panel on the right. Once you are satisfied, click Submit for approval. You must click Submit for approval. Do not click Mark as paid. Mark as paid tells Xero that the contributions were already paid outside Xero's automatic Super system. So take the extra second and click Submit for approval to send the batch into the authorization workflow. Once submitted, the nominated authorizer receives a text message with a code. They log into Xero, go to the Superannuation screen, open the batch showing as pending approval, check the numbers, the bank details, and if all good, they enter the code and click Approve and Pay. In case they don't have the code for some reason, they can request a new authorization code from here. Once the Approve button is clicked, Xero's clearinghouse is authorized to direct debit your bank account and distribute the funds to each employee's super fund. It's important to make sure that your bank account has enough funds available before approval. A rejected direct debit can put the business at risk of missing the Payday Super deadline. The payment is taken soon after authorization. Currently, there is no scheduling option and also no undo function once the batch is approved. And here's the new last step that relates to Payday Super compliance. Approving a batch for payment doesn't by itself prove that the fund received the money. Therefore, after the payment had time to process, generally on the 4th or the 5th business day, return to payroll, then superannuation, and open the relevant batch. Xero now shows you a detailed status timeline for each super batch. You will see when the batch was submitted, when it was approved, and when the payment was actually made. This is the date the contribution was most recently credited to each employee's super fund. And that final date is the one that matters. That should fall within 7 business days of the original payday. So Xero now gives you clear visibility on this where previously you had no way of confirming it. So this is a great improvement after all. I would strongly advise building this into your payday routine. After a couple of days, come back, open the batch and check whether the money landed on the employee's super funds. If everything is within the 7 business day timeline, you are done. If not, you need to investigate the reasons for delays and avoid them in the future. One more thing worth knowing is that if a super payment gets returned by a fund, for example because the member number was incorrect, Xero will send you an email to advise you about it. When that happens, go to Payroll then Superannuation and open up the batch. You'll be able to see which superannuation line has an issue, and you can also see the reason why the fund has returned it. The reason shown in Xero comes from the super fund. If the explanation is unclear, you may need to contact the fund directly rather than Xero. For example, the message may state that the employee is no longer a member of that fund. You can then update the employee's detail in Xero to the correct superannuation fund and resubmit the affected contribution for payment. The main thing is not to ignore the notification email. A returned payment hasn't reached the employee's super account. It needs to be corrected and resubmitted quickly so you can still meet the payment deadline. So that is Payday Super in Xero. The individual steps are not dramatically different from the previous auto super allotment process. The main operational change is the frequency. Instead of treating super as a quarterly task, it now becomes part of the everyday payroll process. Payday Super does add one step to your process, a checkpoint at the end. Though it is a small step in itself, you cannot miss it, otherwise you might get penalties for not paying the super on time. As usual, if you want, you can pop your questions in the comments below or like and subscribe, and that way I will see you in the next video. Cheerio!